I've entitled this session, Closing the $20 Billion Opportunity Gap. And I'm hopefully going to spend the next few minutes explaining to you what that gap is, and more importantly, how I think as an industry we have an opportunity to realise growth through efficiency that is entirely consistent with everything that's been talked about here today. So, just very quickly, a little bit of background on Adslot. Adslot is an Australian company founded in 2010. We have about a staff of 60. By the end of the year, we expect that'll be somewhere north of 80. Our company footprint incorporates the US, UK, obviously Australia. Our client footprint is somewhat broader than that. We're listed on the Australian Stock Exchange, and since February of 2010, Adslot has invested about $25 million in building and acquiring technology. So the space that Adslot is in is what has become known as programmatic premium. And programmatic premium is a somewhat anomalous term, and we'll come to that in a moment. But the history of this for Adslot is that in 2010, we launched the first version of our display trading platform for publishers in Australia. We signed a number of very significant, mostly classifieds foundation clients. We've traded over $50 million, pushing towards $100 million in display inventory through that platform, and we have more than 5,000 active advertisers transacting through the gateway. And so these are some of the foundation clients that you see here on this slide. Very large auto classifieds business, a real estate classifieds business, a travel business, all of which trade their premium display inventory via Adslot. So, just taking a step back, I want to talk very broadly about what's going on in the display segment at the most macro level, so global and in very general terms. So the first thing is that I think we all understand that online media in its various forms is in growth in terms of media spend or ad spend, and within that the display segment is also growing at a similar trajectory. We also understand that the vast majority of the dollars flow into what's broadly known as the premium segment. And depending on which market you go to, these numbers vary, but if we aggregate across markets, this is broadly what we see. Equally, we understand that there's a disproportionate or an imbalanced relationship between the dollars and the volume of inventory. So 88% of the revenue that comes through premium inventory is underwritten by 26% of the impression volume. And whilst it's still very early days, and RTB is absolutely here to stay, there are some interesting emerging trends. Global growth is slowing. So it is absolutely growing, but the rate at which it is growing is slowing, and quite dramatically. A good portion of remnant inventory remains unsold in the RTB ecosystem. So very broadly, again speaking very generally, publishers are taking large chunks of unsold inventory, they're putting it into the black box, and it remains unsold. In the US in Q4, year-on-year CPMs through the RTB ecosystem in its various forms declined by 9%. Click-through rates dropped by 12% quarter-on-quarter, and publishers are ultimately submitting less new inventory as CPMs decline. So I think we're familiar with some of these trends, but what I wanted to talk about is that RTB in its current form, and I would stress in its current form as we use it today, as we understand it today, impression by impression audience buying. I can't see any analyst anywhere in the world that projects that this industry will be anything more than 30% 3 years from now. So this is a very, very significant point. 70 cents of the dollar that is traded through the display ecosystem will not find its way into RTB in its current form, if we're to believe the analysts. So what this implies for how we navigate to a programmatic future for that premium inventory is extremely significant. And certainly we've spent a lot of time at Adslot trying to understand what is the right tool set, what is the adoption curve, what is the nuance that actually makes this a scalable proposition on both the supply and the demand sides. So if we go back and look at premium, there's a couple of things that we understand about this space as well. Whilst it remains in growth, CPMs are pretty flat, and that might be a euphemism in some markets. In some markets, they're flatter than others. Inefficiencies are completely endemic, and business processes are Jurassic. So if we think about a programmatic future, I would put it to you that we have a first principles challenge that we need to meet head on as an industry. And that challenge is not necessarily about big data, and it's not necessarily about algorithms. It's about getting spend out of spreadsheets. It's about getting spend into a programmatic universe. And it's about offering a level of innovation on that journey that is incremental, not exponential. Because as an industry, we're not able to turn our ship quickly enough to take advantage of exponential innovation, not for the 70%. And so this, again, has significant implications for the future. I think the one thing that we keep coming back to as an organisation is that the prize is ultimately efficiency. And efficiency comes in a few different flavours. There's operational efficiency, and there's a couple of numbers on this slide that speak to that. Around about 28 cents in every dollar is what it costs for a publisher to support premium-based revenues as they flow through their sales teams. In TV, it's 2%. So this is not a semantic distinction between, it's not even 100% difference. It's orders of magnitude. So efficiency operationally is a big prize, and that's a prize that can be realised by both supply and demand. Another prize is, of course, efficiency around audience and reducing wastage. And that's a very significant prize, and RTB in its current form speaks to that opportunity. There is also the economic efficiencies, not just derived from those two things, but around price and what we're willing to pay. And ultimately, there's only one stakeholder that underwrites or funds the entire industry, and that's the advertiser. So driving value for advertisers is actually still pretty important. We do a lot of work with publishers, and we thought it would be great to go through an exercise. I spent 10 years building workflow and automation tools for agencies in my prior role with a company called Facilitate Digital. And we used to go through an exercise of actually documenting the workflow as it exists within the agency. And of course, you discover the same themes, which is that it's highly iterative, it's unscalable, it's manual, there's a lot of manual data entry. You discover some more fundamentally disturbing things, which actually there is no price discovery. This is a problem if you're an advertiser. But we discovered exactly the same, a corollary, if you like, of the same issues as they exist within the publisher. They're doing the same things many times without a fit-for-purpose tool set. And this is a very significant problem. And so Adslot's take on this was really the opportunity to start to create an interaction between supply and demand that was built on a premise of access. And so our platform is able to take the publisher's condition from 47 manual steps down to 7, and there's one very alarmingly simple principle that makes this possible, which is access to each other's tool sets. Because in the end, much of what we're doing at an industry level, these structural inefficiencies that we're ultimately all paying for, are a byproduct of the fact that we're doing something else for somebody that they should be doing themselves. So the self-serve concept extends well beyond the notion of a single advertiser transacting on a singular transactional basis with a single publisher. It's a very scalable proposition, and it's a big answer to the structural inefficiencies that we suffer as an industry. Those structural inefficiencies, anecdotally, are represented here in these numbers. Around about 30%, and it varies by market. About 30% of our media consumption is online in its various forms, and about 20% of our media spend is online in its various forms. So that is a structural disconnect. You know, we're 15 years into this. We don't get to say, oh, well, it's new and it's emerging. It's not new. We're 15 years in, and we've got a structural disconnect. And that structural disconnect has a value of $65 billion. Purely a byproduct of inefficiencies at a macro level. A byproduct of the fact that as a supply and a demand community, we do not have the access to each other that we require through technology. Display's share of this is worth at least $20 billion. This is without actually migrating spend from other categories or other channels or other platforms. This is just about getting our house in order. So a couple of conclusions here, and I just want to spend the few minutes that I have remaining sort of talking about what the future might bring. RTB, as we know it, in its current form, will continue to represent and only represent a minority of ad spend. Inflection points are being reached. There's an imbalance in supply and demand, which can only benefit demand. This is one of the problems that publishers have, is that their experience of this universe and the downward pressure on pricing is a function of supply-demand ratio. So, you know, there's a couple of different ways to look at that. One is, well, you know, if you're going to submit too much inventory and make it all available when there's not enough demand to service that inventory, then you're just going to have to lump it. But in the end, they're happy to lump it because it's all the inventory they couldn't sell anyway. So it's a free hit. We've actually got to start to think beyond these dynamics if we're going to solve these problems for the 70%. The majority of dollars will remain in that premium segment. I think that premium segment is going to be transformed through technology over the course of the next 2 to 3 years. I think it will be dramatic. But I think what's really important is that we're not selling a seismic shift or a philosophical debate to an industry in order to engineer that change. Because if you look at what's happened inside the agency accounts for about 85 cents in every dollar that gets spent across the publishing community and display generally. And there is a philosophical divide between the old world, the Excel spreadsheet, and the new world, which is scalability through data-informed decision-making, human or otherwise, and programmatic transactions. And we're not going to bring the old world on the journey into the new world if we engage in a philosophical debate. And if we do, it's going to take a lot longer than it should. What we have to do is we have to bring the industry on a journey. We have to innovate incrementally, which means as an industry we need to have a plan. And we need to execute to that plan, and it needs to be done incrementally, in stages. So we start with a base case of status quo, and we start to innovate. What we have today is a polarised existence in terms of the way we trade display media. We have the old world, largely traded today still through fax machines. I mean, it's, you know, if you go into the financial sector, an industry only needs to get to be worth $5 billion, and they automate the hell out of it. You know, we've got a $650 billion global media industry, and there's only very small pockets of it that are actually automated. So this is something that we need to confront, and I think digital is the only starting place for that, at least holistically. Everyone wants an answer to this, right? Publishers need an answer. Every publisher that I talk to, they're saying, how do I cut down my labour costs? How do I do it? How do I automate large chunks of the way that I monetize my audience? Agencies are looking for an answer because they need to continue to be the services black box. And I think they will, because the world is getting more complicated, not less complicated. And advertisers, for the most part, will continue to outsource that complexity to a partner. an agency. So marketplaces have been talked about today. I think marketplaces have all of the constructs of what we would consider to be a really effective solution, this notion of access. Making demand more accessible to supply and supply more accessible to demand. It's a very simple concept. It's one of the founding concepts in any marketplace. And then it's a place where we can trade. Transactional reconciliation of known demand against known supply in real time. Again, it's a very, very simple concept. I think the opportunity that we see as an industry is how can we transpose all of the efficiencies that we derive through the RTB ecosystem, how can we transpose those into the premium world? And the answer is little by little. It's not going to be a revolution. It will be an evolution, and I think that evolution can take place over a condensed period of time, but it will ultimately have to be done in increments. And so this is what we're doing as an organisation, is we've spent the last several years building programmatic guaranteed technology platforms for publishers. And as we've gone, we've built the business brick by brick. We signed over 300 publishers at the end of last year. We signed the world's largest news site just recently, which was the Daily Mail, with 120 million unique visitors. And we are aggregating that supply, and we'll be launching a market to make it available to more sophisticated sources of demand, with a tool set that is about informing human or machine-based judgment through data and offering automation in the way that we trade. So quite specifically, it's an extension of this notion of access, but we're doing it exclusively for premium, guaranteed, futures-based inventory. And I've touched on this notion of human or other judgment informed through data. I think that's critical to the future of the industry. There's no way we would ever want to close the door even if we could. And so the theme of data is entirely relevant to this discussion and this ongoing debate. Just one final point that I'd leave you with, which is that the reason that we have to innovate incrementally is to account for the human and the organisational condition. If we can't get 70 cents in the dollar out of spreadsheets, how are we going to get it into a world that was built for tomorrow? The human condition is the condition that we have to account for. And so that's the basis on which we plan our platform's future and our technology, which is about how can we make this really easy to adopt? And I think that generally supply and demand would both concede willingly that there are inconvenient truths in the emergence of programmatic buying and selling. And so if the inconvenient truth for the demand side is that we may never get to a day where every impression is traded in real time, impression by impression, then equally the supply side has to recognise and accept the inconvenient truth that they may never be able to disaggregate or to aggregate their audiences, rather, in the same way they have historically. Their audiences must become increasingly disaggregated in the way that they're understood to present value and the way that we transact. But we don't see any reason why all of that can't be achieved in a world where we continue to transact on a forward guaranteed basis for premium inventory. It's done entirely programmatically, and it's done on a futures market basis. Thanks very much.